Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today I want to talk about some tax advantages that we may take advantage of the moment me and my fiance become married. So one real estate tax code that I've never been able to take advantage of is called the real estate professional status. So a real estate professional status, REP for short, is when essentially you can take your active income and your passive losses from real estate and use that to offset each other. And this is how people pay zero in taxes. So let me give you an example. Let's just say I qualified as a real estate professional, and I'll talk about how to qualify for it later based on my understanding. Keep in mind, I'm not a CPA. I just done my own taxes for the past 7 years, believe it or not, on TurboTax. And basically, if I were to make W-2 $100,000, that's considered active income because I'm actively working for it. And let's just say I buy real estate and on passive losses. So what's passive losses from real estate? It's depreciation. It's accelerated depreciation, and it can create paper losses on your tax return. So let's just say I have $100,000 in passive losses in real estate, which is passive losses. So I have active income and passive losses, $100,000 each. And if you don't qualify as a real estate professional like me, I don't qualify right now, they stay separate. My active income gets taxed normally, and then my passive losses just carry forward indefinitely until I utilize those passive losses. So that's what I've been doing. I've been carrying forward my passive losses every single year. I lost money on my, I spent a lot of money to renovate my apartments. Those passive losses carry forward. I think I have about $300,000 in passive losses that are being carried forward. And it's not even me doing accelerated depreciation, which is accelerating the losses in year one, in 1 year versus over 5 years. So an example would be if I spent $50,000 to renovate a kitchen, for example, or renovate something for $50,000, I can either A, accelerate it in year one, so write off all $50,000 in year one, unless the tax code changes, which it may, or I can spread that out over 5 years. So it'd be $10,000 a year for the next 5 years. So that's what I've been doing because I cannot take advantage of my passive losses just yet. But if I did qualify as real estate professional status, that $100,000 from my W-2, my active income, would be wiped out by my past $100,000 passive losses. And essentially, my taxable income would be zero. And assuming I'm taxed at, let's just say, a 30% tax bracket, I'd get $30,000 from Uncle Sam when I file my taxes in April. So that's what people mean when they say they pay zero taxes. They're basically taking advantage of the real estate professional status tax code. So now let's talk about how do you qualify as a real estate professional. So to qualify as a real estate professional, number one, you cannot work a full-time W-2. Like, yes, I work 40 hours a week in my W-2, and yes, I can maybe claim that I work 41 hours as a real estate professional, but the IRS will not buy that. You basically have to be not full-time W-2, but maybe you're part-time. So let's just say you're part-time W-2, you work 20 hours a week, and you do 21 hours a week as a real estate professional, which could be a real estate agent, mortgage lender, something related to real estate, property manager, and you do 21 hours and you can document those hours, then you may qualify as a real estate professional. So that could be a move I could do. I could just be part-time, like do 20 hours, work 2 10-hour shifts, 21 hours, and as long as I document more than 20 hours of real estate related activities as a real estate agent or broker, then I would qualify, and all my passive losses from real estate would offset my active W-2 income. That's one way. Another way to qualify as a real estate professional is you must spend at least 50% of your time as in the real estate profession. So that's what I mean. Like if you're doing 20 hours as a pharmacist, you need to do 21 hours as a real estate agent and document those hours. So it's clear and you can show proof during an audit. Another way is I can continue to work full time, but once I'm married and I file jointly, let's just say my fiance, she becomes part-time as a pharmacist. So she's working 20 hours a week as a pharmacist. So let's just say I make 200K, and let's say she makes 200K, but now she's part-time, so she's making 100K. So collectively we make $300,000 W-2. And from there, she spends 21 hours as a real estate agent. At that point, collectively, we qualify as real estate professional status. So if I had $300,000 of losses on my real estate portfolio, it'd wipe out $300,000 of our active W-2 income, and assuming at that point, a 40% tax rate, that's $120,000 back in your pocket. So, one can argue that's actually more cost effective if you do the math. So, for example, basically, at that point, if let's just say we made, instead of making $400,000, let's say we're taxed 40% to be consistent. That's about 160K. Actually, let's make it 50% for easy math. We gross 400,000, 50% in taxes for this example. So we will take home $200,000 in income. Now, let's just say my fiance cuts down to part-time and qualifies us as a real estate professional. And now she goes from 200 to 100K W-2, and I still stay at 200. So our W-2 is now $300,000. However, if we're able to wipe out my $300,000 of income through depreciation, I would essentially have $300,000 in take home because I'd have no taxes. So I went from $200,000 in take home, assuming a 50% tax rate, to $300,000 in take home with a less tax rate because I'm taking advantage of the real estate professional status. So actually, it'll pay us more for her to be part-time, and it's better for lifestyle. So that's how people take advantage of real estate professional status. So I call that a tax match. You have a high-income W-2 who's married to a real estate professional, and you own a bunch of rental properties, and it can offset each other. So that's great if you're married to like a doctor and they're making $1 million a year, and you own a bunch of real estate. You can wipe down that real estate portfolio. So that's the nice hack that you can do, right? And that's what people mean when they say they pay zero taxes. But the downside of the strategy is, you're deferring the taxes. So eventually you're going to pay the piper. If you were to sell the property and not 1031 exchange it, you're going to do depreciation recapture and pay back those taxes. So it's just kicking the can down the road. So yes, it's great to pay zero taxes if you're using this strategy with real estate professional status. You have a lot of real estate that you can depreciate, but you have to keep on going. You're stuck on this hedonic treadmill to continuously buy real estate to wipe out your active income. And that's stressful in itself. So there's a time and place to do it, but just know you're kicking the can down the road. And if you keep on doing it, you have to continuously buy real estate. You have to continuously 1031 exchange. And you may not want to play that game in the future. You may want to play now, but you may not want to play in 10 years. So there's pros and cons to that. So anyways, just kind of want to share a tax strategy that we're going to take advantage of, in the future when we have kids, when my fiance goes part-time, and I may go part-time too, depending on our financials, and probably become a real estate professional in a way, maybe a real estate broker / loan officer. And we'll take advantage of those tax advantages for a few years, but know that we're going to have to pay the piper eventually. Anyways, if you have any questions, let me know. Love to answer your questions. Let me know your thoughts on becoming a real estate professional. And if you're looking to buy multifamily real estate with some guidance, check out the mentorship program. Otherwise, please like, comment, subscribe, and share this video with somebody that can find value, and hope to see you in the next one. Thank you so much.